Jessica Amir here with the Finance News Network. Joining me now from ALE Property Group is its Managing Director, Andrew Wilkinson. Andrew, welcome back.
I'm pleased to be back.
So you're Australia's largest owner of freehold pubs. Just tell us about the company for those who are new.
ALE is a real estate investment trust. We own 86 pubs spread throughout Australia. We have a market capitalisation of $950 million. Our properties are located in the major capital cities, Brisbane, Sydney, Melbourne, Adelaide and Perth. 90% in those capital cities. And we have a single tenant, ALH. That ALH is 75% owned by Woolworths and 25% by the Bruce Matheson family. We have long-term triple net leases with ALH across the properties, and they've been continuously operating as pubs for more than 60 years. So they're institutions in their local communities.
Now to your half-year results, just tell us some highlights.
We saw the distributions increase by around 2%. We also saw the value of our properties increase to more than $1.1 billion, again an increase of around 2%. Our capitalisation rates remained steady at 5.15%, and our gearing is now at an all-time low.
And what drove that?
Our rents increased by CPI, and that's what increased the rental income. We saw our interest expenses rise off the back of, number one, a lower interest rate, but increased borrowings. And finally, our management costs were slightly higher, given we are spending additional money on preparing for a market rent review.
Now, a little bit more about your gearing profile and your debt.
ALE's gearing is at an historic low of 42%. It was previously, if I go all the way back to IPO, at 88%, and it has progressively reduced over the last 14 years to an all-time low at that level. Our debt maturities are spread over the next 6 years, and we are 100% hedged on all of our debt for the next 8 years. In short, we have an appropriate capital structure which Moody's rates investment grade, and we have maintained that rating.
Now to the pub portfolio, just tell us how it's performing.
As I said, the value of the properties increased to more than $1.1 billion. Our cap rates remain steady at 5.14%, and we've seen, just in the last 6 months, a further 2 Dan Murphys added to the portfolio. One at the Miami Tavern on the Gold Coast, and the second at the Jeps Cross Hotel in Adelaide.
And what's the outlook for rents this year and further out?
We have our first market rent review in November of this year, and we expect a positive outcome. The profitability of the hotels across the portfolio isn't evenly spread, so we don't expect the full 10% increase on all of the 76 properties that will be reviewed. But we're looking forward to that outcome.
Now, can you tell us about the significant opportunity that you have to develop land that connects the pubs?
ALE owns nearly 1 square kilometre of land, or around 950,000 square metres. Of that 950,000, pub buildings and retail liquor buildings occupy around 25%. The rest is car parking or spare land. ALE and ALH have added around 30,000 square metres, or 3% of that 25% over the last 10 years by working constructively together. We'll continue to work with ALH to add to the improvements and profitability of their operations.
Now turning to the future, Andrew, what's your outlook for the second half?
More of the same. We'll continue our preparations for the market rent reviews at the end of the year. We'll have the valuations of the properties updated at 30 June, and we'll continue to work constructively with ALH to consider various developments on the properties. I'd also add that ALE, over the last 14 years, has outperformed every other real estate investment trust in Australia, and we currently offer a distribution yield of just over 4%, 100% tax deferred.
Wonderful. Andrew Wilkinson, thank you so much for the update.
Thank you.